let's talk about this euro dollar. We're looking at the daily chart here. If we were to zoom out and move all of this over, we can see that, we all traded this, right? That the euro dollar had a really strong run for a really long time. The Eurozone was one of the last to kind of be hit by this global recession that happened. Not really even the last. I guess it just seemed like the least worrisome, right? When you're talking about, all of these economies tanking, it was the least tanking at the time, right? And things started to taper off, right? As discussions started to happen, as measures started to be taken and considered and then taken again, things started to kind of level off in here, and everybody wasn't quite sure what was going on. Well, then we just had, one horrible thing after another come out of the Eurozone, and then everything tanked. Okay, that's the long and the short of it, right? From a technical standpoint, I'm going to show you one of the things I start to look for in terms of, how do I know when, from a technical standpoint only, things are starting to look like they might turn around? How do you know that this is going to be, this is going to be that last tired out move instead of this double top in here, right? How do we know that? Well, we don't never really know for sure, but from a technical standpoint only, let's talk about what we can do. These are really hard to identify. Picking tops and bottoms are really difficult to identify when they're going on. But we do have the advantage, even way down here, even we're talking months later, we do have the advantage of retrospect and being able to make sense of what's going on with this price action. I'm going to show you a little trick that I use that kind of tells me things are tiring out. I call it 3 times extended. On shorter time frames, I'll actually do this away from a really price-absorbing 800 simple moving average, but you really don't even need that on your chart. You can really identify these areas pretty simply on any time frame without any indicators. So what we got here was a steady move upward out of this consolidation area, right? We had this little double top. Everybody was talking about it. Is the euro done? We're having this double top. There was one more drive to the upside. What this makes then is an irregular consolidation pattern. And I bet if I had some kind of oscillator pick a favorite, we might have even seen some divergence or something in there, even something as long-term as the daily chart. But it doesn't really matter because what I'm starting to see here is irregularity, right? The market stopped behaving the way that it normally does once it's picked a direction. And we're talking about a very steady eddy pair. The euro dollar just does not move impulsively. It so rarely happens that when you get little fakeouts like this, it raises an eyebrow, right? It makes you stand up and pay attention to what's going on with the price. It becomes irregular. This is my first sign that things are ready to turn around. What we have now in terms of retrospect, and actually, you know what? I'm going to get rid of all of these support and resistance zones. We'll put them back on in the course of the conversation, I'm sure. Let's just take a look at price here. I'm going to grab this larger consolidation area in here. And I'm going to say if the market was willing to move that far, this far within the range of its indecision, then generally speaking, it's willing to move 100% of that range once it moves outside of that range of indecision. That it usually becomes my profit target once I see a break outside of a consolidation. This is just these fibs are just normal old fibs. There's nothing fancy about them, and it's just a real easy cheater way that I have to measure 100% extension. So this is my 200% fib level, which it's just this range doubled down, right? Which is a mirrored down for me so I can see that area. Now, if I was just looking, at the time of the breakout, and I didn't have the benefit of the support and resistance zone, what I like to do is take a look. Okay, I start with that 200% zone, or 200% price line, and then I like to ask myself what makes sense in terms of support and resistance, because I'm not a fib trader, I'm a support and resistance trader, right? I've said to myself the market typically is willing to move the full length of the range of indecision. However, I know that there are levels in here, supply and demand levels, that are used by this pair, by market makers with big money, and I want to respect those first and foremost. Tighten those up, and that becomes my profit target. What we see here, again, we're talking retrospect. It seems really easy when we're talking historically, right? But I'll get to the part where we get to put a plan together for what's coming up in terms of our own trading. So now we get to, get in our little time machine and move forward. What has happened is this has actually come down. It's not only hit the profit target, it did hit the 200% extension level. What's typical for most crosses, except the dollar loonie, is that you will get a consolidation range, usually between that 161.8 and the 200. This actually consolidated all the way up to that 138.2. That's okay. And that's, again, those of you who have been coming to these with me and trading with this for a while, we talked about this little pop-up here. We actually found a way to use our analysis in retrospect in this larger context to help us take a trade out of our next consolidation level. Do you remember that? Worked out really nicely. But at any rate, this was the consolidation level that it chose this time, right? If we're willing to say that the market is going to have that be its range of indecision, then that's the range I'm going to trade. And you'll find when you start to look at this that the ranges do tighten up. We go from larger to a medium size to a smaller size. This one came through, except for this little pullback, hit it quite cleanly right in here, that 200% extension level. I think I'm fairly sure my profit target was a little bit tighter, just a little more conservative. You can see here what it didn't do this time is consolidate up above that 200% extension level, right? What we are getting now, though, you can see this area of indecision, this larger area of indecision. What we did get, and this was that little wick was our pop-up out of that consolidation area. We did take advantage of that. Let me grab it. Now I can't grab it. We did have a chance to take advantage of even one more move. That's the 3 times extended. This pair, from a technical standpoint, should be very, very tired. That's when I expect to start seeing irregular consolidations. And that's what we've started to get. Look at the wicks and shadows, the tiny little bodies. The market just wasn't sure. It was time for a pullback. And then you couple that with headlines flashed across all the economic newspapers, the entire market short the euro dollar, blah, blah, blah. Your contrarian traders are coming in and they're going to drive that price up because once it hits the newspapers, man, you're just about out of sellers, right? Your sellers are going to see that and go, okay, if everybody's short, I better take some profit because there's about time that people are going to be reevaluating their positions and taking those off. So you see profit taking, you see contrarian traders come in and take advantage of that indecision. And that creates all of these irregular patterns that can signal the end of the trend. Now, I'm not picking a bottom. I don't think the euro dollar is done going south. What I want to talk to you about next, though, is the reason I think that and why it's important for me as a trader to balance my technical analysis with a fundamental understanding. I know I'm kind of beating this to death, but I hope I'm kind of making sense here as well and giving some tools that you can use as traders. So what we're talking about here, make these candles look like candles, what we're talking about here is while we're in this area of indecision, we're getting an irregular consolidation pattern. What makes sense to me to do, even though I have a fundamental bias to the short side, what makes sense to me to do is almost let this longer-term consolidation, this really dumped rather quickly. And now it really kind of went sideways for a while, even though the market was, all of the news was saying short, short, short. The market really said, not so sure. That pause in there is kind of the resetting of the game that I'm willing to consider because I hold this bias from a fundamental standpoint to the short side. Okay? I hope what I just said didn't sound like a whole bunch of double talk. So what I'm saying is with this irregular consolidation, I'm willing to let this be kind of a new chance for me to look for a second series of 3 times extended.